Thank you. Now we'll dig into the results and implications. As Sienna just showed you, what you saw also from the white paper and what you can see in our app is the distribution in the form of a box plot of all of these scores ranging from 0 to 1. We'll break this down a little bit more as we go on. Important here is to show that this is actually 404 investors overall. So when we look at the ranking results, you can see more in the appendix of the report. You can see the quartiles. This year, we've listed the quartiles of all of the asset managers and funds that we've assessed, not the asset owners, but all of the asset managers. You can really see the quartiles sorted then also by alphabetical order to see roughly where individual asset managers have placed. Here we show the top 5, and then we also show the bottom 5. So as you can see, the very last investor on the list are those that are voting with Vanguard's pass-through policy, specifically the company board aligned policy. So this is, of course, an intuitive finding. If you place investors on the spectrum from most sustainability aligned to business as usual, for lack of a better term, it makes sense that in all the cases that it's really pulling out the nuance between those that are really pushing for sustainability and voting against management in certain ways, whether that's for shareholder proposals or against board elections, etc., and that the baseline kind of base case is this company board aligned policy. Here you can also see the results by topic. So if you've logged into the app already, you can see that we group your score. You can see your score on all of these given pieces, as well as at the top level. Here you can see the governance and remuneration cluster, the climate, diversity, workers and human rights, politics and lobbying, and other environmental and social. So each of those has a different distribution along the line. What we saw was specifically on politics and lobbying, the largest gap between asset owners and asset managers' average scores. When you break it down slightly differently, you can see the quartile composition by investor type. We've often heard anecdotally that asset owners are more sustainability oriented, more long-term oriented, more kind of systemic minded in the universal ownership frame than asset managers. The results that we found thus far have confirmed this. So as you can see, the quartile breakdown from asset owners and asset managers are more evenly distributed, whereas asset owners are highly concentrated in Q4 and Q3, so the top, but not only. So there's still a few from specifically state pension boards in the US and the states you might expect where they're concentrated at the bottom. Looking at this slightly differently, you can see the breakdown across asset owners and asset managers. So here, yes, we have many more asset managers that have been assessed in this ranking than asset owners, but still the concentration goes further kind of down as you move from Q1 up to Q4. So the majority, as you can see on the previous slide, the majority of the asset owners concentrating up in the top quartile and pushing down the asset managers on that basis. Key implications of our work. 1, voting for sustainability is promoting greater clarity and transparency in investor sustainability orientation by looking concretely at the actions taken. So at the voting decisions actually reached and voted on in a given meeting, rather than what people are saying or committing to. A third-party assessment of investor actions taken increases accountability and reveals a new facet of responsible investment that transcends binary ESG frameworks, and that there's significant variation between choices on the selection of proposals. As you could see from the distribution of the scores, those represent real variation in terms of the concrete choices. So what we've seen from a lot of the asset managers and asset owners that we're assessing, when they give a rationale, they'll say shareholder proposals are taken on a case-by-case basis. So the decisions on shareholder proposals. So we really see there's time, there's effort, and there's conscious work going into these decisions, and they're not, many investors are not simply robo-voting, contrary to some of the narratives you might have heard. So next steps, giving you a little bit more insight into what you can do with your results. We encourage you to share your results on the basis of our previous analyses in previous years. We have a growing number of those who are either referencing them in blog posts or LinkedIn posts or even in special sections in the sustainability report. You can reach out to us if you want access to the underlying data to get things more in brand. We think it's useful for people to see that there is kind of external verification of an internal approach. A lot of times proxy voting is very challenging to talk about, challenging and kind of clunky to explain. And we think that this is emerging as a more user-friendly way of explaining this. You can join investors with over 30 trillion in AUM by signing up for your free resonanz account. If you scan this QR code, you can set up an account and you'll get your own, if you've been assessed, you'll get your own customized scorecard and be able to see the 3 most significant gap votes completely free. If you haven't been assessed because you're smaller or because we didn't have enough data, you can also, if you're an asset owner, you can still gain access to an additional 5 asset managers' scores for free or reach out for the licensing. Alternatively, if you want to discuss next steps or you'd be interested in a deeper dive to learn about our custom benchmarking or other aspects of our offering, you can use this QR code to set up a call and discuss next steps. Thank you for your time and participation and for listening to our deep dive into our methodology, for following our work. I'd like to open up for questions.